Hello guys, welcome back to the channel, and today we'll be seeing and learning about supports and resistances. Supports and resistances are a very basic concept which most of you probably already know, but we will learn more about when a support or resistance might hold and when it might break, and we will see under which circumstances and conditions do the support and are the supports and resistances respected in the market, and when are they broken through, and when is there a breakout. So support and resistance, as you all know, is always an area. It's never a single line. Support and resistance is an area, and price moves between support and resistance, up and down. So this is the resistance, this is the support. So we also know that sometimes this is not always necessary. Price may also break out sometimes on the upside, and price may also break down on the downside. So how will we tell is if the when a price is approaching a resistance, will it break through the resistance or will it turn back from the resistance? Or when it is approaching the support, will it break through the support, or will it rebound from the support? So how do we tell this? So for understanding this, we need to understand the market conditions, the market structure, the market environment. So first, let's see a simple case of a resistance existing there, and price has taken multiple resistances from this point. So suppose this is the market structure being formed. So what does this tell you? So price is taking resistance at this level. So what would you do as a trader? So you would observe that price has turned around from here once, price has turned from the same level again. So you would think of shorting the market here, right? If the third time it comes back, you would expect the price to turn back again from this point, because it has turned twice already in the past. But what we fail to observe is, and this is why most of the trades on support and resistances, a lot of our trades fail. Why? So what are we not observing? We are observing the highs being formed at the same level. Another point we should consider is that the lows of this market are actually moving higher. So the first time the low was here, the second time the low was here, which formed a higher low, which means the sellers. So first time it goes into a resistance, the sellers come and the price moves down, and again it goes up, and the second time also seller comes. So let's call this S1 and let's call this S2. So now the second time the selling occurs, price is only going till this point, which is above this point, which means the selling pressure the second time is much weaker, right? So this means when price comes back here for the third time, the selling pressure in the third time might not be enough. Again, note, I'm saying might. I'm not saying it will not be enough. I'm saying it might not be enough to push the price low again, because it is weakening continuously. And on the third time, this resistance might be broken through. This is exactly why we say that when a resistance has been tested multiple times, when the resistance is being tested multiple times, it becomes weaker. The resistance becomes weaker and weaker, and the probability of breaking through becomes higher and higher. So this is the exact logic behind this. So to tell if this resistance would break or not, we should observe the lows which are being formed in the market, and if these lows are higher lows, then we should stay away from trying to short the market at these resistances. We can instead, what we can do is try to catch the breakout. When it breaks the resistance, we can try to buy instead of trying to short the resistance. And very similar for a support as well. So if this level has been acting as a support for the market, we know that price would have tested this multiple times. Now suppose this is how the price has come. Again, you can observe the highs which are formed are lower highs. So the buying pressure which comes in B1, B2 and B3. So the first time buyers came in, they could take the market price till here. Second time the buyers came in, they could only take it till here. They couldn't even reach the previous levels, which is a sign to us that the buying pressure is decreasing. Now the third time price comes reaches that support level, we, instead of observing that okay, price is constantly bouncing from here, so I will go long on this stock because there is a chance that the stock will bounce up again. But you need to play on probabilities. What is the higher probability? The higher probability is that since the buying pressure is weakening and the stock is forming lower highs, the higher probability is that it will break lower and this support will be broken through and the support is weak now. That is the higher probability in this case. This is also in the form of price action patterns. You can see that this is also called an ascending triangle. So the trend line forming is this, and this is exactly what we call an ascending triangle, where it is a bullish pattern, bullish continuation pattern. So if we look at some examples for this, so let's look at Asian Paints. Now on the lower time frames, if I observe Asian Paints, what has happened here? So I can clearly observe that this level right here was a resistance for Asian Paints, as it took resistance multiple times. So if it now I can observe that it has taken resistance twice here. So of course I can go short here the third time. Of course I can go short here the fourth time. But my profits, would they be big? No, they wouldn't. They would be small profits, and small profits are not we go after. We need the big profits. So now if at this point when price was here, if you observe these lows which were being formed are continuously rising, so we can conclude okay, now the buyers are getting stronger and stronger, so maybe stay away from selling and see how market plays out. And as you can see, market played out and a high momentum move as soon as the resistance is broken, right? So this was an example of resistance being broken. Now let's see another example in Britannia. Now if I look at Britannia again, clearly after price has been taking resistance at these levels, at this level of around 3,600 rupees. So it acted as resistance here around the same levels pretty much, and again the third time. So third time, so this was resistance 1, this was resistance 2. So when it came here the third time, should you have sold the stock? Because should you have gone short on the stock basically? Because you can observe that price has been taking resistance from this point and turning around from this exact point. So should you take again? So hoping that the resistance would hold. Now again, same logic again. If you observe the lows here, they're continuously rising. The lows are continuously rising in level. So this again indicates a weakening resistance, right? So you can see as soon as this happened, price broke through on the higher side and went up till the next levels. So again, this is another example of a resistance being broken. Now if I come to GAIL, this is an example of a support being broken. So how is the support being broken? So again, same logic, price had touched this point multiple times and bounced up. So suppose you observe this 1, 2 and 3 times, and the fourth time price comes here, you obviously want to go long because price has reversed previously here. So you hope that okay, this is a strong support for me, so I will go long for this. But what you don't observe or missed out on is you missed out on the highs which are being formed in the market. This was the first high level, this was the second high, and this was the third high, and the next highs were also consequent highs were also being lower and lower. This should have indicated to you that the buying pressure in the market is reducing, and this support is weak because it has been tested multiple times, and the highs which are being formed are also lower highs. So selling pressure might increase. The fourth time the stock approaches this support level, selling pressure might increase. So if you want to see the support, don't look at the support, look at the highs here. Again, similarly, if you want to see if the resistance would hold, don't look at the resistance, look at the lows which are being formed in the market. So this is one very important point which many traders miss out. So we try to catch stocks at the support points or short stocks at the resistance point, hoping that they would reverse. So never play on hope, always play on probabilities, not on hope. So the probability that this support would hold is very less, right? So that is how you can get a fair idea of to judge whether a support or a resistance would hold, that level would hold, and if the price would if it would be respected or the price would break through and give you a breakout trade instead. So that's it for today, and in the next episode we'll look at more possibilities and more situations and conditions about where support and resistance would hold and where they would break. So thank you, and like and share the video please if you liked it.